Okay. Hello, everyone. It is Sunday, January 5th. My name is Lee McMahon. You are in the Global FX Club weekend webinar. Thank you very much for joining me. I'm just getting over the end of a cold, so I have occasionally be sniffing. So sorry about that. If you are watching the recording, please pause the recording, read over the risk disclaimer, which should be on your screen. And then we're going to go to the charts to talk about the very busy week that we have in store for us today as we finally return to normal liquidity and volatility after the holidays. Talk about some of the setups that we have out there right now, and then go from there. As always, if you have questions, by all means, please feel free to put them in the chat box, and I'll be happy to answer them. I will do my best to cover everything as quickly as possible here so we can go on and enjoy our Sundays. So let us begin. Pull up my right chart. All right, so we're going to begin with Aussie dollar. Aussie dollar is, let me make sure my charts are connected. Looks like they are. Okay. Aussie dollar gapping slightly higher to start the week. You can see it up here. We did test this nice support area here. We're now kind of dancing around this descending trend line dating back to early mid-October or so. You can see we did breach it. We sort of fell back to retest it. Depending on how you draw the trend line, we've either broken back below it or we're sitting right near it right now. Even if we haven't broken back below, there is this horizontal, this neckline sort of resist support area that we're now retesting. So I remain somewhat bullish the Aussie dollar, looking for at least a move up to test this 90-50 region. All right, that's the 200 period EMA here on this 4-hour chart. It's been somewhat significant lately, so you can see it back here and up here. So I'm looking for that to at least get a test, and then we'll see if we can break above it and continue to correct to the upside. Some of the other Aussies also look pretty good. All right, specifically Euro Aussie looks pretty nice here. I am really hoping, actually, on Euro Aussie that we see a little bit of a rally, about 152.60, about 90 pips or so. It would be a very nice opportunity, I think, to short this pair. Right now, we're bouncing off and holding above this 200 period EMA here. All right, you can see the same level. It's been a little bit significant here. We're now holding above it and above this horizontal, this horizontal region as well. So I wouldn't see a little bit of a quick move higher, all right, before this double bottom kicks in and we start to see more lows. If we check out to the daily chart, with these highlighted areas will make more sense. All right, this 100 period, this 100-day EMA is really the level I'm looking for here on Euro Aussie. All right, you can see it's been significant here twice in the past. Right now it's trading by 146.74, so 500 pips lower. I think that would be a nice first target. Well, and really be more of an aggressive end of the move target here for Euro Aussie. So that's kind of the area I'm keeping an eye on. Corresponds pretty nicely here. All right, with some fib support as well. 618% fib comes in there. So that's the area I'm looking for eventually on Euro Aussie to the downside if this move continues. But like I said, need an entry. We may get one if we see a small rally here to test the neckline of this double top. All right, double top one, top two, neckline break. So should be at least a little bit more downside here on Euro Aussie. Aussie Swiss, very similar. Okay, double bottom right here. Broke the neckline. Now we're testing this 200 period EMA. May see it on the 4-hour chart. May see it drift back down towards about 80.35, 65 pips or so, before we get another bounce and a move to continue to the upside. I do like Aussie Swiss higher. I also like dollar Swiss higher. Okay, you can see a breakout here on dollar Swiss. The one thing that is making me a little cautious here on dollar Swiss is that sentiment is about 4-to-1 in favor of the bulls. All right, so that's a little bit of a warning sign. We may see a little bit of a correction first. If we do see a pullback here on dollar Swiss, the level to be watching would be about 89.80 or so, about 60 pips. All right, lower. We may see a bounce from there. Euro dollar. All right, I was really hoping after we saw this breakout that we would see a move back up towards 137 to add to short or short for the first time. Did not happen. The meltdown has sort of continued. First level of resistance is about 136.15. First level of support is about 135.20. So I'm sort of just watching it as we trade within this range here. Don't have a great play right now. I would fade a move up. All right. If we got it, depending on how it looked, I'd be looking to maybe take a short on a move up towards that 136.15 area. We'll have to sort of see how it develops, though. I'm not going to force anything on the euro. I do like the euro dollar to continue to move lower, though, so it is a question of sort of finding setups on that. Pound dollar, testing support right here, 100 period EMA here on the 4-hour chart. The bigger time frame charts, all right, on pound dollar are not particularly promising. We have a bearish engulfing candle on Thursday, and if we check out the weekly chart, okay, that's not a particularly positive weekly candle either. So I'd be cautious about picking your longs here for pound dollar. But if we do see a move down to what would be about 163.25, I will be looking to buy. We do have the 200 period EMA here on the 4-hour chart, which has been fairly significant of late, and we do have a trend line retest dating back from this move starting in December, on December 9th, cutting through this Christmas spike. All right, picking up another test as well. So that is the first level. I think will be provided a nice opportunity for longs on pound dollar. So right about in this range. Okay, just above 163. So for me, that means euro pound. I am continuing to look for euro pound downside. All right, I've been talking about this for quite some time. Still looking for a test of these 82.50 lows. From there, we'll have to see. I do suspect that we will make new lows below there. But that 82.50 is certainly the first level to keep an eye on. I've been looking for that since we've been trading up here. Let's take a look at Kiwi. Okay, Kiwi is actually, if you're not in a Kiwi trade right now, pretty nice long opportunity here at 82.35. Should we extend down that far? That would be a trend line retest and a pretty decent fib level as well. So look out for that on Kiwi dollar. Okay, something like this. Dollar CAD. Continue to trade as a possible head and shoulders. Hasn't really managed to have any conviction to the downside right now. Still looking for about 106 to break, and then we need really about 105.50 to break. If we get below those levels, you can start to maybe see a little bit of a reversal here on dollar CAD. But until that point, I'm kind of just staying away from the pair. I don't feel like it has any particularly compelling setups going on right now. So I'm just keeping it in the back of my mind, and we'll see if something pops up. Some of the CAD crosses a little bit different. Pound CAD has pretty nice support level at about 173.50. Euro CAD is trading at support right now, actually. This is a little bit of a tough level for it to rally from. Click onto the daily chart, you can see we're just above this 50-day EMA, and we're sitting in this horizontal support region. So we could start to see EuroCAD climb its way back out of the pit and head for 148 again. But if we do manage to break down below this 50-period EMA, 50-day EMA, look for a 142 basically to be the next support level. That's the 100-day EMA. There's also some trend line support in there depending on how exactly you draw. All right, these trend lines, so something like that. All right, so watch out for that level on EuroCAD. Right now, all these CAD crosses, well, EuroCAD and PoundCAD, pretty distinct bull trends, all right, with dangerous weekly candles. So just sort of keep your eye on it. I mean, look, if you look at EuroCAD, we had a dangerous weekly candle before, and we took, you know, a little bit lower the next week and then rocketed higher. So don't get carried away with trying to short these pairs. All right, we're in a pretty well-established uptrend, and that may continue forward. Aussie CAD has a nice opportunity to get long Aussie as well. All right, you can see that we have held really below this trend line. It's still, if we click out to the daily chart, Okay, you can see it now. This is 1, 2, 3, 4 tests of, now 5 tests of this trend line. If we do manage to see a daily close above this trend line, that may offer an opportunity for you to get along an Aussie pair. If that's something you're looking to do, it may avoid some of the volatility that we have associated with dollar pairs this week with NFPs and everything like that. So watch Aussie CAD. I think it's an interesting setup going forward. Kiwi CAD is just really a disaster right now. Really has been for some time. There is a long opportunity for Kiwi CAD here. Okay, we did break out of this trend line. We have a pretty decent candle here on Friday. Support is about 87.76. Looking for new highs around 89, maybe even 89.50. It's a choppy pair though, so I mean, you know, the trading conditions are never best on your Kiwi CAD, but it's a pretty decent setup, all things considered, here early in the week. Let's flip real quick to the yen pairs, take a look at some of those. Weird candles on the yen pairs. This Friday's candle was pretty odd. Filled a gap, all right, at least on my broker. Some of the gaps this time of year are weird because they are holiday driven and some people are open and some people are not. But we did fill a particular gap. Tested this trend line, held up pretty well. Watch these 105.43 highs. Break above there could signal a continued move to the upside. If I'm looking at yen pairs, we're going to take a quick look at the Nikkei. All right, the Nikkei did manage to break down here back into, back below its recent highs. Frankly, still looks pretty constructive. All right, you can see we're holding that support level. Got a pretty decent bounce off of it. Could be prepping up for a move up towards new highs. Still holding above, you know, well, right now, this major candle that we saw move back here on the 18th of last month. All right, so the Nikkei looks decent, so I wouldn't be surprised to see dollar yen continue to push to the upside. Aussie yen has broken out of its wedge-like thing. Okay, it's been certainly a choppy breakout. We broke out, we broke back in, we broke back out. Now we're holding above for right now. So do like Aussie yen for a continued upside, but you know, it's kind of been a choppy pair lately. CAD yen, that's a good question. You know, lately the Aussie moves and all right, so historically, traditionally, etc., Aussie up, yen down tends to be the correlation. So we see the Aussie strengthening and risk on, and we see the yen weakening and risk on, and then vice versa. Lately, though, the Aussie's been doing its own thing, and really lately, though, the yen has been doing its own thing as well. The yen's just been going down, which means yen pairs up, and the Aussie has just been going down. So the two of them, you know, have been weakening together, which is not usually that common. Which, you know, you can see if you look at Aussie yen, you know, this has been, you know, this congestion has been taking place in the midst of a very significant period of yen weakness. All right, so that Aussie weakness has really hauled it down. If we start to see the two of them finally start to move together, I would expect Aussie yen to finally really start to accelerate to the upside. I don't think there is a fundamental reason why the two would be highly correlated right now, any more so than they usually are. But if we do see a risk-on period, you know, we could see your traditional risk-on period. We could see Aussie yen finally start to pick it up as the Aussie rallies and the yen continues to weaken. But the problem with that is that we've been seeing a pretty decent run of risk. Okay, this is E-mini futures. You can see we've gained 100 points on E-minis since, you know, very late in December. So we've had a good risk run, and now Aussie is finally starting to move to the upside. It makes me a little bit nervous. It's a very weird, the Aussie's been behaving very strangely lately. So I don't really think there's a ton of correlation going on here. I think we're finally starting to see some Aussie short sellers take profits into the new year, and I think we're continuing to see the Nikkei move higher and dragging the yen up with it. CAD yen is one of the more bearish yen pairs right now. All right, after we broke out of this descending wedge, we held this 100 period EMA. I would expect to see maybe one more low. All right, down to about 97, but the rest of the yen pairs don't really look that bearish, so we may not get that on CAD yen, but that's how it's trading right now. Euro yen also obviously bearish here. That's more of a euro sell-off than anything else. Broke that channel. Pound yen looks pretty decent. I'd really like to see pound yen get down to about 170.25 or so I could buy it. Up until we get down to there, I'm not really interested in touching it. You can see how much time we spent overbought here on pound yen, so it's nice to see the RSI sort of dip down into the normal range. But I would be very picky about my entries to the upside on pound yen. I would like to see it move a little bit lower. Kiwi yen is just disastrous. It's been ugly lately. This has been a pair, though, if you could force yourself to just buy it and close your eyes, it's worked out really well. But these intermittent swings have really been pretty ugly. The one consistent, technical setup right now has been this trend line. It's held very nicely since October, really end of October, and we did break to new highs. All right, so we're above 86. We're closing in on 87. If we get a dip back down to this trend line, call it 86 or so, 86 even, that may be a decent buying opportunity for Kiwi yen if you want to play the continuation of this, slow, steady grind to the upside. I'll look at Swiss yen because I know some people like it, even though I despise it. Swiss yen, I guess, kind of bearish. Okay, broke down here. I would kind of like to see it be a little bit more clear. I'd like to see some sort of consolidation up here so we can call it a head and shoulders pattern and then trade it like that. But I don't have a particularly compelling setup right now on Swiss yen. We finally started to see a little bit of downside. I think if we look at the weekly chart, all right, kind of an ugly weekly candle here last week. Not an engulfing candle, but just ugly. And certainly we've seen 1, 2, 3, 4, 5, 6, 7, 8 straight up weeks before that. So, the pair is certainly overstretched a little bit. All right. What can I cover? Showed you Amy. Let's look at gold and silver real quick. Gold continuing to finally starting to catch a bid. All right, off 1180, this little double bottom here. If we look at the daily chart, okay, that's potential daily double bottom. We broke above this trend line. First moving average on daily resistance is 1250, then 1290, then 1350. On the 4-hour chart, we're finally getting above this 200 period EMA. First time we spent a lot of time above there since basically November. All right, so starting to see a little bit of energy in gold. Finally, some bulls starting to get back in the game. Whether or not it just is going to end up being a selling opportunity, I don't know. All I know is the opportunity to buy was down here at 1180, and the opportunity to sell is not yet. All right, so kind of flat on gold. We'll see exactly what happens this week. Are similar. All right, finally catching a bid above that 200 EMA. That resistance comes in at 21. That would be a decent selling opportunity. Copper coming down, sitting at support right now, actually, to start the week. All right. You can see copper support starts right around here. Okay, 3363 continues down to about 330. So that's pretty decent levels for copper. Let's do some of the pound crosses. Pound Aussie kind of just going sideways. 182 is support. I don't see a compelling setup here though yet. Pound Kiwi, compelling setup. There is actually. It's just a little bit lower than we are right now. I would like to see pound Kiwi test this trend line, okay, which would be about 197.50. We get down to about 197.50, so about 80 pips lower. It might be a nice opportunity to try to buy pound kiwi. All right. So the general theme seems to be for pound pairs, buy a little bit lower. Euro kiwi has gotten hammered lately. I don't even actually know where I'd look to buy Euro kiwi. All right, we're just sitting above a 6.18% fib now. It's at 163.26. I don't really want to buy it into that though. Other than that, we're below all major trend lines. So I think what needs to happen for Euro kiwi is we need to see some a few days worth of price action to see if we find a new pattern or direction for the pair. Because right now it's kind of just bouncy, and I don't really want to try to buy it and catch a falling knife. I don't really want to sell it just in case we see a nasty snapback. Kiwi Swiss, again, you can see broke out of this wedge and just rocketed higher. This is actually a really nice trade that I forgot to pay attention to. I don't like Swissy pairs, which has been unfortunate lately because they've been trading very nicely, and I've missed out a few of these pretty nice opportunities. Pound Swiss, all right, watching 149.22 highs, test there, and then we'll see how it goes from there. Then this was another pretty nice trade that I missed, this double bottom type scenario here, and then the rocket higher. But watch these 149.22 highs, look for rejection candles off there. We could start to see the Swissy strengthen. But in general, considering the way dollar Swiss looks and the way that Euro Swiss is finally starting to catch a little bit of a bid as well, I'm not super keen on shorting Swiss franc pairs at all. I would like to buy Euro Swiss, all right? If we ever manage to break out above this trend line here, we haven't yet. It has been extraordinarily consistent. This trend line dates back to the 8th of July. We've had 1, 2, 3, 4, 5 now tests on it. All right, so if we do manage to finally see a breakout, I think that would actually be very nice. Nice low risk, sort of low volatility buy that you can keep an eye on for. All right. Any pairs that I've missed that you would like me to take a look at? Ugh. I tried an Aussie Kiwi trade end of last week and I got stopped out. It had a very nice breakout. Now it broke back below. This pair is the worst. I still like it to the upside. All right, you can call this area here. You know, we could start to call 108. You know, something, a little double bottom, you know, whatever you want to call it. All right, and if we manage to get back above these highs, we could start to see a breakout. So, you know, this trend line was pretty decent. We broke it, and now we broke back below it. So anything that you take with Aussie Kiwi need to be wide stops. And I'm, you know, biased to the upside. I just haven't found another setup that I really like right now. Pair's kind of a crapper. Alright, I think I covered most of the pairs. Aussie Swiss I did, Kiwi Swiss, Pound Swiss, oh, CAD Swiss. We'll do that real quick. CAD Swiss is testing resistance right now. Alright, there is an opportunity to buy it if we see a dip down to 84.60 or 84.20. Right now it's at resistance. I don't really want to fade it, and I don't want to buy it at resistance, so staying out of it. Did CAD Yen, Kiwi Yen, Aussie Yen. Dollar yen. This is the dollar yen, you know, channel. It's been holding pretty well. Watch out for these 105.50 highs, basically again. Yep. All right, so any other questions? Cyclical trends out there for well, I mean, if you look at the, hold on. If you look at the, I'll go back to my charts in 1 second. All right, if you look at the longer term charts, right, this is, I mean, this is QBCAD, it's a bad example. If we look at the longer term Euro charts, if you want to say that there are large, cyclical trends like secular bull, bear markets in currencies, sometimes there's just not. All right, so like if you look at E-minis, clearly, starting at 1068, or whatever the level was on the actual S&P 500. Okay, 1074. There has been a fairly significant rally. We are obviously in the midst of some sort of secular bull market. It's lasted for at least, 3 years now. All right, but if you look at Euro, not so much. All right, you can see from 2011 to 2012, we were kind of in a downtrend. Since 2012 to present, we're kind of in an up sideways trend. In Euro Aussie, there are, Euro Aussie obviously was a little bit better. All right, we're in some sort of major bull market here on Euro Aussie. And if you go back before here, if you get the 2008 to 2011 range, we were in sort of a bear market. So those ones have moved a little bit better. But the majors, there tends to be a certain degree of consistency. The yen pairs are an example of good runs higher because of massive central bank intervention. Aussie, though, from, this until recently, this has been a fairly sideways pair. And was followed by dramatic sell-offs. And we're sort of at a resistance level where we may see, the pair can reverse and march up back towards this 106 region, not really enter a major trend in either direction. Euro CAD, all right, a little bit of a bounce higher. These European commodity crosses, the pound has been the same thing. All right, we're starting to see some rallies higher. But even pound, if you look at pound Kiwi, that's just been sideways. So you really need to find, very specific pairs that offer the major 3 to 4 year type, 5 to 6 year type bull bear trends in currencies. That's not really what the markets are looking for in currencies. Most people, most real money users of foreign currencies, so corporations, governments, banks, etc., tend to benefit from stable exchange rates, not violently oscillating ones. So you start to see that sort of reflected in the majors. You don't tend to see a ton of volatility over large time frames. They tend to stick kind of close to a particular range and trade within that range. So if you're looking for major, secular 8, 10, 12-year trends on currencies, for the most part, you're probably going to be disappointed. And I think, it'd be well to remember these longer-term patterns that the currencies tend to follow. It's just not the way that these markets are designed to function. It's not the way that, it's not a functionality that would benefit the people who use these markets for real things. Yeah, yen pairs are different. And the reason that we've seen such violence in the yen pairs is because of the Bank of Japan has been willing to put up with those, or have been willing not just to put up with, but to encourage those kind of movements. All right, that may be one of the few examples where we may get another 6-year trend on let me let's look up a 20-year chart, all right, of dollar yen. Okay, so you can see this one, we've been in a pretty decent downtrend starting in 98. We hit a 147 high, ground down to 75, and now maybe we're starting to see the reversal. Off that 75, we may start to see a 3 to 4 to 5 year bull trend on yen pairs as long as the BOJ keeps pumping out money. So this range is a little bit wider, but we're still looking at a fairly consistent. I mean, it wasn't long. We were at 80. We were at 85. Oh no, 79.70 here in 95. All right, before we saw a bounce up, now we're back down here. Now we might see a bounce back up. It's just a broader range. So yeah, yen pairs, tend to trade like that. Maybe we'll see a 3 to 4 year bull trend in yen pairs, but we still probably were likely to stay here in this range. They're harder to find. All right, currencies are much harder to just buy and forget about for 25 years. Equities, that's sort of the dream for retirees. You buy when you first start working at age 20, you pull it all out when you're age 90 and hope you timed it kind of right. Currencies don't work like that. They require a little bit more active management from investors and traders. All right, any other questions? All right, I'm going to wrap it up. I will have this recording posted by the end of the night. Thank you very much for joining me. It's always nice to talk to you guys to start the week. If you have questions, as always, you can find me on Twitter at Duke0777 or at globalfxclub.com. I hope good luck trading this week, and I look forward to talking to you soon.